Hello everyone, welcome back. And today we are starting with chapter 3, how stock market works. When we are learning how the stock market works, the very much important thing is that we have to understand how the stock prices change. Now, if you have certain stocks or if you own or if you're planning to get one, buy a few stocks or any company stocks, you have to understand why do the stock prices change. Okay. The first and the most important reason here is supply and demand. Okay. Supply and demand is responsible for the changes of pricing around us. Everything. For example, you know why gold is expensive? Because of its rarity and high in demand and low in supply. Got it? So, like that, we do have some shares which are high in demand and low in supply. So, due to that, the stock prices go up. Again, there are some stocks which are high in supply and low in demand. For that reason, the stock prices go down. You have to understand why or how the stock market works and why or how the stock prices change. Okay. Then we have company performance. As I told you in the previous chapter, if the company's value increases or if the company's performance is going well, the stock prices also go up. Clear? Then we have market sentiments. Yes, see, market does not have sentiments. We humans have sentiments. But why we call it market sentiments? Because the people dealing in the market carry a certain sentiments, and these sentiments can be, extremely greedy or extremely fearful. Why I say extremely greedy and extremely fearful? Because if it's in the bullish season or extremely greedy season, the stock prices or the entire market tends to move up. Again, if it's in the fear season or if it's in the bearish season, the stock market goes down. Clearly. Okay, not going to confuse you. Then we have economic indicators. Yes, countries' economic indicators like GDP, you know, GDP and economy and other economy indicators can also move the market up or down. Got it? Then we have interest rates. Yes, the interest rates set by the RBI, okay, and the changes in the interest rates also creates a huge impact on the market because interest rates directly affect the dealings of the currency, which directly impacts on the economy. Then again, we have political and regulatory factors. See, political and regulatory factors can flip the market, you know, in no time. Why do I say this? It's because a certain policies can be good for the market and a certain policies can be bad for market. So that's why I call it flipper of the markets, political and regulatory factors. Okay. Then we have global events. See, global events like war, disasters. These are also can also impact the stock price very much. Yeah, then we have industry trends and innovations. Yes, like right now, in the industry, there is a trending thing called EVs. Any companies associated with building EVs or making EVs, their prices are going up. Their stock prices are going up, actually. Yeah. And dividend payments. Yes, dividend payments directly does not affect the company, but creates an indirect impact in the investor psychology, which means that if a company is giving you good dividends, you will surely invest more into that company. Then yes, we have speculation and trading activity. So the daily transactions in the stock market for any stock can also impact the stock prices because it can affect the supply and demand. Got it? If you have any questions, please comment down below. Then we have how the stock market works. See, the stock market is classified into two parts, primary and secondary market. So let me take you to the stock market, primary market, and secondary market. Now, the primary market only makes up to 5% of the entire stock market, but the secondary makes up to 95%. Okay, I'll tell you why and the reasons and everything. Okay, let's go back. So in the primary market, securities are created and stocks are initially issued through IPO. IPO means initial public offering. See, securities are created means stocks are created. How are created? New companies want to sell their stocks in the stock market, so they have to start with the primary market. Okay, then go to the secondary market. So for explaining you primary market in detail, we have a particular chapter, which is your chapter 9. Okay, then we have secondary market. Secondary market. The secondary market refers to the market where previously issued financial instruments are. Now, previously issued, no. Why do we say previously issued? For example, XYZ is the company which newly wants to get registered in the stock market. So they have to start with primary market. They have to initiate an IPO. Once this IPO is filled, okay, then this IPO goes to the secondary market. See, again, there are certain conditions here which has to be filled. Then only it goes to the secondary market. Clear? And in the secondary market, it gets listed. Okay, so right now, any company, for example, Tata Motors or Reliance or any other companies like Tata Steel, and you'll be listening to people around you, and they must be talking like, today Tata Motors stock prices moved high up, or today Reliance, there was a really bad day for Reliance, the prices went down. So these terms and these conditions that they are talking about, this is directly happening in the secondary market, not in the primary market. Okay, so when you have to buy or sell shares also, you're buying from the secondary market. Okay, now again, one more thing I would like to add on here, the most important thing. In the primary market, you are buying shares directly from the company. Okay, note this. And in the secondary market, you are buying shares from someone who has the share. This someone can be a big entity which is holding the company's stocks, or can be another individual who has the stock. Got it? That's how the primary and secondary market works. Now, yes, where the moves are. So, secondary market is the place where investors trade previously issued stocks. Yes, previously issued means that, as I told you here, this IPO which got issued here does not mean previously. It can be for a long time, it can be as long as it is there, anything. Got it? See, what people refer to when talking about the stock market. As I told you, when everybody is talking about the stock market, they're generally talking about the secondary market, not the primary market. Okay. Unless there is unless there are people who are talking about the IPO that is regarding the primary market. Got it? See, stocks are bought and sold on exchanges such as New York Stock Exchange and National Stock Exchange. Let me take you back. Yes. In the secondary market, see, you buy shares from someone who has the share or anyone who is holding the share or anything, but through the exchange. Got it? Exchange is here. Exchange is like the middleman, as I showed you in the chapter 1. So same, but see, exchange is present there in the primary market, just to ensure all the things are happening with proper rules and regulations for that. But you buy shares directly from the company. Got it? See, trading of a company's stock does not directly involve that company. Yes, as I told you. One second. Yeah. As I told you, trading of any companies, for example, any companies which is Tata Motors or Reliance or Tata Steel, for me to buy and sell their shares, the company has nothing to do here now, because I am buying shares from someone who has the share. So the company has zero involvement here. Got it? Unless they are increasing their promoter holding. Now, where to buy or sell shares? See, where to buy and sell shares is through a brokerage. A brokerage account, this is an investment account that allows you to buy and sell shares, stocks, bonds, mutual funds, and other securities. Yes. So I have a Fires Demat account, which is my, which is my brokerage terminal. I'll just show you how it looks. Okay, showing you anything. This is how it looks. This is the index. So this is this is how my Fires terminal looks like on my desktop screen. Okay, so this is a web app, and I'll add a link below where you can open a brokerage account in Fires. And once you open the account, I'll guide you through how to, you know, I'll just guide you throughout the DMAT. How does it looks like? What you should do, what you should not do, everything. So particularly, I'll make a video on that also. Okay. So see, a brokerage account. This is an investment account that allows you to buy and sell stocks, bonds, mutual funds, and other securities. I'll just take you back. So this is the account where I want to buy or sell. Just for example, HAL, whether I want to buy it or not. Got it? And I can check the pricing in the form of graphical charts. You open a brokerage account with a brokerage firm, which is a financial institution that acts as an intermediary between buyers and sellers. Yes, you open a brokerage account with, you know, with a particular brokerage firm. You cannot open it with anyone. When I say anyone, nobody can be a broker. It has to be a particular entity and it has to be a particular firm. So, brokerage firms make money by charging commissions or fees for each transaction. Yes. What is a demat account? And inside a demat account, I'll be guiding you in the next class. Okay. For today, I'll end up here and thank you so much for joining the class.